Hey, hi everyone. This is your domain consulting guy Anabadya back with yet another video in the insurance consulting series in this channel, Domain Consulting. So, if you have been following us in the last few videos, you would have seen that we are in our life insurance journey, where in the last video we have covered what is term life insurance. We have understood the different features of term life insurance, when it is beneficial, for whom it is beneficial, what kind of term life insurance that we can buy, which are on offer in the market, right? So today we will cover the next type of life insurance. We will see what is a whole life insurance, right? So if you see, whole life insurance is a type of permanent life insurance. So the previous one was term life insurance. This is a permanent life insurance, which is giving us coverage for lifetime, right? So that's the most important part, that a whole life insurance gives us coverage for lifetime. So there is no fixed term. Again, coming back to the experience I took in the example that I took in the last video. Let's say currently I am 35 years of age and I want to buy a insurance. Now term life insurance says that I have to buy for a fixed term, right? Say for till my 60 years of age I am buying an insurance. So that is a term life insurance. But what is a whole life insurance? If I want to insure my family for my entire lifetime, that means that at whatever age I die, after that, the beneficiary of the policy will get the entire death benefit. Okay, so there is no fixed age tied to the policy, to the whole life policy. In that case, it is called a whole life policy. So that is the basic difference of a whole life policy versus a term life whole life insurance versus a term life insurance, right? That the coverage is for lifetime, right? At whatever age I face death, my family will get the death benefit after that. Okay, so that way it is totally flexible. Okay, and I'm not insured till a particular age, I'm insured for my lifetime, right? Now the second feature says that this whole life insurance is also contains a cash value along with the death benefit. Okay, that's another very important thing, that a term life insurance does not have a cash value component. It only has a death benefit component. What does that mean? That means that I am buying a policy and I am getting a certain coverage. Now that coverage, if it's only a death benefit, that means that I am getting a fixed benefit, right? Say for example, I am taking a term insurance for 1 crore and that insurance has a death benefit of 1 crore. In that case, if I die within a particular age as per term insurance, I will get back that 1 crore, right? But what does whole life insurance say? Apart from the 1 crore, it also will give me a cash value of X number of amount, right? Be it say 10 lakhs, 20 lakhs, whatever it is. Now, every premium I pay in a whole life insurance is utilized in two things. One is for the cost of insurance, that is cost of running the policy, and the other part is going into the cash value, right? So obviously the kind of policy you buy, the amount of premium you pay, and also the amount of additional amounts that you remit in your payments, and the amount of interest that generates out of that payment, and also the amount of dividends that the insurance company gives you. Based on these kind of things, your cash value is decided. How much additional your beneficiary will get on after your death is the cash value amount, apart from the death benefit, which is fixed and which is also given along with your policy. The third feature says most whole life policies, they are level premium. So level premium means that your premium amount is fixed for the entire the period for which you are paying the premium for the policy. Fourth feature says premium amounts are comparatively much higher than term life insurance. Now this is given, right? Because it is giving you much more benefit than term life insurance. Term life insurance is for a particular term, right? Say for 60 years or 70 years of my lifetime. If I face death only within that period, then my beneficiary will get the entire death benefit. But whole life insurance or a permanent life insurance, what does it say? That it is giving you the entire flexibility of your lifetime, and then whatever age you face death, after that your beneficiary will get the benefit of the policy. The penultimate feature, the cash value typically earns a fixed rate of interest, right? So what is this fixed rate of interest? The fixed rate of interest is basically given by the insurance company, and that whatever cash value is getting accumulated, the amount of interest that is generated for that amount is a fixed rate of interest which is given by the company, by the insurance company. And the last one says that one can withdraw any amount or take loan while alive, right? So say for example, you have given premium for 10 years now in your whole life policy, and you are given premium as a 10 lakhs, right? So out of that 10 lakhs, you can withdraw any amount from that 10 lakhs, or you can take a loan from that 10 lakhs as well, based on the amount of premium which is accrued so far. But this would reduce death benefit, right? So obviously, if you're taking away some amount of money again from the amount accrued, that will obviously reduce your death benefit if you do not again pay back that amount after a certain period of time, right? So, but this is giving a flexibility in time of requirement, that say for example today suddenly you are in need of money, then obviously you can take certain amount of money from that the amount that is accrued so far, or you can take loan from the whole life insurance that that it has to be an active whole life insurance at that point, right? So these are all the features of a whole life insurance. Now we would look at what are the different types of whole life insurance, right? So essentially there are 4 different types, out of which we just saw that mostly 90% cases it's level payment, which is the first type, right? That your premium stays constant for the entire period of your payment or the entire period of your policy, right? That's called level payment, which is the first type and which is the most common type, right? Apart from that, there are another 3 types. The second one is single premium, right? So from the name only you can understand that instead of paying premium throughout the lifetime of your policy, you can pay a lump sum amount at the beginning and you can have the policy also. But this type of policy has some tax implications along with it, right? Which we will go in further details sometime later. Now the third type is limited payment. What is this? What does this mean? So say for example you are buying a policy for 10 years, but you don't want to pay for 10 years, right? You only want to pay for 4 years. Then obviously your amount of premium will go much higher, but it will give you the flexibility of paying only for 4 years and then but having the policy for the entire period of 10 years, right? So that is called limited payment. That's another kind of flexibility it is giving. And then modified whole life, right? That this is also another type which is gaining popularity slowly. So say for example you're young, you have your salary is comparatively on the lower side. So the kind of premium that is coming for a whole life policy, it's a little higher for you, right, initially, and then say for the first 2-3 years you don't want to pay so much of premium. So you go for modified whole life policy where it will give you the flexibility of paying lesser amount of premiums for the first say 2-3 years of the entire period, and then after that your premium increases and obviously increase a little more than your level payment if you would have paid level from day one. So in the longer run, this type of policy you will end up paying a little higher premium than level payment, but it is giving you the flexibility of paying lower premiums for the first 2-3 years of your policy period, right? So these are the 4 types of whole life policy which are available in the market today. So now if you have understood the features of a whole life policy, so let us look at the advantages and disadvantages of this type of policy. So the advantages it says is it provides lifetime coverage. That's the first and most important and prevalent feature that we have understood. Then cash value you can use for loans, withdrawals or premium payments in times of need. It is giving you a cushion in terms of some additional money that you can withdraw from your savings in this whole life policy, which remind you is not there in term life insurance, right? So term life insurance only has a death benefit. Here you are also getting a cash value component. The third feature is guaranteed death benefit amount. So it's a fixed death benefit amount also, which is giving you, and then basically if you are only breadwinner of your family, then it will give you that the entire benefit to the policy, to the beneficiary of the policy holder once you are not there. Fourth feature is predictable premium payments. So as I was saying, for 90% of the cases people go for level payment. So you have a predictable premium payment. It won't suddenly increase or decrease unnecessarily because it is not market linked or anything. And then you are getting all these loans and withdrawals advantages, and the loans are also tax free for a whole life policy. Now looking at the disadvantages as well, and these are comparative disadvantages based on the other type of policies which are there. The first type being the premium is more expensive than term life. So say for example, if you can't afford a high premium, but you also want a life insurance, maybe you will go for a term life insurance instead of a whole life. Cash value may grow slower than the other type of policies. So we will look at in our next video some other type of life insurance policies like universal life insurance, variable universal life insurance, in which you will see that the cash value growth can be higher compared to whole life insurance at certain scenarios. The third disadvantage here, it says that no flexibility to adjust the premium in most policies. So you can't adjust the premium, and mostly you will go for level premiums. And the last one, limited ability to adjust the death benefit, right? The one scope that you have is if you pay a little additional premium compared to what you should pay, or if you are giving, or if the company is giving you certain dividends, you can utilize those additional money to increase your death benefit component. So that is one scope that you have. But apart from that, you don't have much of a scope to increase your death benefit in a whole life insurance, right? So that is all in terms of the advantages and disadvantages we wanted to go through today. So the last topic in this video is, having said and done all these things, so whom it is suitable for, right? This is the most important, that's the crux of the things, that why we would look at whole life insurance, right? Who will buy it? So this is suitable for, we have researched the entire different types of policies, and then we have come up with these three types, or the three segments of the customers for whom it is suitable for, right? So this is for people who have high life expectancy and don't want to take any risk in terms of their death benefit, right? So normally in our family, so average, people live say 80 years, right? Now I am 35. I don't want to go for a term life insurance which will insure me say till 60 years or 65 years, because who knows, I may leave after that as well, right? So I don't want to take any risk in terms of the coverage. I want to go for a lifetime coverage. I will straight away go for a whole life insurance. What is the second need? For those who do not mind additional premium for additional cash value or death benefit, right? So here, as we were discussing, that if you pay some additional amount throughout your policy period, then your cash value will also increase, or your death benefit can also increase, right? Whichever component you can increase, and that will give additional cushion to the beneficiary of a policy, right? So this advantage that that you will have in whole life policy, which you may not have in some other policies. So people who want to take advantage of these these additional features will go for whole life policy. And the third type is who look at life insurance also as a savings instrument, right? So basically the third point is linked to the second point. So that is people who only want to go for death benefit in life insurances won't go for whole life insurances. But people who would look at this, the policy that they are investing in also as a savings instrument along with a life insurance instrument, they will definitely look at whole life insurance, because they are getting this cash value along with the death benefit. So both these things they are getting at the end of the day, right? So these are the different topics that we wanted to cover in this video. I hope you liked it. So the next video that we are going to do is we will look at universal life insurance and variable universal life insurance in our next video. So hope to see you there. Thank you for your time today.